We're happy that you've joined us today. We're going to address the issue of, is your practice profitable or just busy? My name is Cheryl Dean. I'm a product operations manager with Centist, and I've been with our company for almost 6 years. And I've been in the dental and healthcare industry for 25 plus years. And with me today is someone that many of you know and follow on social media, and you listen to her podcast. And she brings 20 plus years of expertise. She's very well respected in dental insurance and RCM. So we want to welcome today author and speaker Teresa Duncan. And she is going to give us some amazing and practical information on our mid-year revenue check-in. Later, I'm also going to share a little bit about how automation can help to keep you moving forward. And then we're also going to have some Q&A at the end, so be ready for that. And with that, welcome, Teresa. I'll turn it over to you.
Awesome. Great. Okay, so let's go into, is complexity the new norm? So, okay, let's just level set here. Many of us we've been doing this for a while, and we have watched this grow more complex. I know many of you, I can see some of you on the chat, and it's pretty nice to see everyone. Here's the thing. We started out when it wasn't quite as difficult. And what I really feel now is that the newer people that we're training are walking into probably the most difficult stage of dental insurance that I've ever seen. And so it's almost like there's that analogy of frogs in hot water. They don't realize it's boiling because slowly the temperature has come up. And I feel like that's where we are in dental insurance. Those of us who've been doing this a long time, I think we've just gotten used to all of the boomerangs we have to deal with. However, newer people coming in, it's a little bit harder. So we do need to focus on helping them out more, but also making our jobs easier. So when I talk about automation, when I talk about making this less difficult, it really is focused on helping the veterans, but also helping the new people. And then the last mile is helping clinical understand why all of this is so important. And that could be, as you all know, full day event. But why is it so difficult that now we need software programs, we need AI, we need multiple spreadsheets to track all of this? Well, plan design has changed a lot. Plan design used to be 180/50, but now we're seeing, even in the preventive section, we're seeing 80% coverage. We're seeing deductibles apply to PAs, but not to bite wings. And it's just been one of those, let me back up here. The reason why it gets so complex is because the people who drive the purchase of these plans, the employers, they're looking to save money, right? So what they're doing is just kind of tweaking here and tweaking there. And what has happened is that means our administrative burden, which is a term you probably heard a lot more in the last 2 years than ever before, our administrative burden in verifying all of this has been much, much more difficult than before. The patient expectations are at a higher level, not just because of dentistry, but because in general, most people want service when they want it. They want it to be amazing. It's all of this stuff. So when they walk into the dental office, there's this expectation that we're supposed to know down to the penny how much it's going to cost. Reality is, I think when you actually get it down to the dollar and you've got it right on, I think some of us do a little cheer when we enter in the check, like, "Ooh, look at that. It worked out." Not for preventive, because that's pretty easy, but let's be honest, when you put in a big check for a bridge, you're like, "Ooh, I got it. I know." I get that feeling too. But that doesn't realize we have not realized how that's not the norm for the new people coming in. Like that's what they're used to. They're used to this expectation of, I can get it close. I can get it really close to the dollar amount. But then reality checks in, and there's some weird clause that we haven't seen, or some sort of weird deductible that applies all over. How many of you have been seeing deductibles that are multiple deductibles within a plan? I've been running into that in some of the smaller plans where you have a deductible at the preventive level and a deductible at the major level. This is just one of those. I mean, honestly, does our software can accommodate that. Think of your practice management system. How many deductible fields do we have, right? So the unfortunate piece too is that we've got a lot of burnout happening. I know many of you who are training, you see that, right? So we're supposed to keep nurturing the new people, training them, but then they're leaving. And then what happens to us? Right? I mean, I've been in dentistry for a long time. I'm not going to be here forever. What happens to my institutional knowledge? And in your office, if you've been there a long time and you know how everything works, that's institutional knowledge. You can't replace that. You can put a lot of processes together and all that, but you know that Mr. Hurt, when he comes in, he needs to make sure that that chair in the waiting room is open because that's his favorite chair. That is not documented, right? That leaves the practice, but we somehow have to replace that. All right, Cheryl, let's go to the next one.
Mhm.
And what we've also seen is this, we can get paid faster. We can submit claims faster. And I remember when we were all told if we go paperless, we'll never have to see paper again. Okay. I fell for it. We all fell for it. And we all know what happened, right? So
Right.
faster claims, we are sending them faster, but it has not translated for the most part into faster payments for claims that need actually to be looked at, right? Yes, preventive can get sent through much faster. Yeah, that we can get paid on that, but anything that needs to be looked at seems to be taking a little bit of time. But what I do want to encourage is that we need to look in the mirror. Here's what I'm seeing after years of working with offices is that we're very quick to blame, the carriers. And I'm not here to cheer the carriers or disparage the carriers. What I am here for is to say we need to look in the mirror sometimes. What I do find is bad data going in. Perhaps the claims aren't clean, right? What we call first pass. Do the claims go through on the first pass? If they don't, why is that? Because you can't really say it's a carrier if the claims don't go through.
Mhm.
I think maybe the only way you could blame the carrier is if you know they're eligible and they haven't updated, right? But if they're not in the system, it may be because of our date of birth was incorrect, and it's maybe that's not even us. Maybe that's the patient. Like maybe they don't know their husband's birthday like they thought, right? So we have to make sure all that data is correct. But also the faster payments piece. So if we get fast payments via EFTs, we're looking at ERAs that we all know don't make a lot of sense. The ERAs are in a different language. And what I would urge you to understand is that if you're training somebody to come in and do the billing side, this may be the first time that they've had to master this language that looks a lot like Latin. Let's be honest. They have to match it up to a bank account, print out or, on the screen. And that looks like Latin to somebody brand new who maybe hasn't even managed their bank account ever. So it all needs a little bit of grace and patience for us to get that together. But the faster payments piece, I think what we could say is faster processing, but not necessarily faster payments. And that is where you really need to have a system in place. And this is part of the mid-year check-in and the looking in the mirror. When you process all of these ERAs, and if you're doing paper, EOBs, are we actually processing them quickly because we have a lot of things going on? We need to do this, we need to get that going to the bank, if it's paper. Are we rushed? Are we, whatever the reason is, are we finding the things that need to be addressed? And if you go back and you take a look at your system and you go, oh man, I really dropped the ball on this. Please don't put it on yourself. Here's what I want you to start with. It's a new day. Tomorrow's a new day. Okay. So the first step is making sure that now you have some systems in place or you put some systems in place. When the checks come in, we do need to make sure that if there was no payment for a procedure code, why is that? Did we expect that? Okay, fine. But if it's something you planned to have reimbursed and you based your estimates on that, well, guess what? We need to appeal that. There are many times in the years I've audited offices where instead of appealing, it was easier for the person to put it on a pile and then it went and it aged, the pile sat there for a while. And then at the end, it was almost like, oh, it's so embarrassing. Or maybe I missed the timely filing or the appeal timely filing, and they end up just quietly writing it off. For a small office, that can really add up. If you're in a corporate setting, you know that that's exponential because you think of the one person that's probably not keeping up with it. Look how much revenue flows through that desk, right? So opportunities to appeal is something that we need to track. And when I say track, and you'll hear me say this a couple times, when I say system or track, I would love for us to get away from this journal, having a notepad, having an Excel spreadsheet, having sticky notes. I was the queen of sticky notes. It was amazing that I would always get for Christmas from my boss all these different colored sticky notes. That was one of his gifts to me because he just knew I loved them. And now looking back, what did I do with all those sticky notes? I killed a bunch of trees with that, right? But that's how I operated. So take a look at how you operate. Is there room for improvement in that? It's a comfort to stay in that Excel spreadsheet lane, but I've seen the benefit of moving to a system that can automate it and track it, whether it's your software, whether some of you are building your own software, who knows? Maybe it's through, maybe you are using a spreadsheet and you're using the AI in there. But remember, it has to be HIPAA compliant. So be careful with using free versions of all of these spreadsheets that are out there. What I want you to do, though, is see if you can automate stuff as much as possible. And I want to talk a little bit about that more in a slide or two. But also, what I have seen with these network leasings, and boy, that could be a whole different course. And I don't think it would be a very productive course. It would just be me complaining about network leasing. And I think that would be most of us because I really feel that the network leasing is out of control. I have had multiple conversations with carriers who will tell me, yeah, you can't put the horse back in the barn. It's kind of taking on its own speed. They're having a hard time with keeping up with the making sure that their provider listing is correct. They're having a hard time because their customer service calls have exploded because we don't know what's going on, but there's no relief in sight. So let's go back to what we can do, how we can help ourselves with fee schedule accuracy. If you are in a lease network arrangement, it is really important for you to stay on top of that, whether it's, of course, you should be signed up for these email newsletters, but even so, maybe put in a calendar reminder to go to those websites like Connection Dental, DentaQuest, whatever. Just make sure you go there and check their listings. Make sure you didn't miss anything. I would rather you check that regularly, maybe monthly, just to make sure, because the worst thing is getting an EOB and identifying that there's this fee schedule in the corner, listed in the corner that you didn't even know about. Has there been offices who have just kind of given up on this? I hate to say it, but I remember speaking in one place and the girl was just saying, you know what, I'm the only person up front. I don't have time to be on the phone. And I'm pretty sure, and she's done this before. She said when we went through one connection, I got out of one particular carrier. 3 months later, there was another connection that was made and I was back in. And she said, there's not enough time and enough energy for me to fight every wrong fee schedule. The dentist was standing right next to her. Okay. Here's the thing. There's a point where to track all that down, you either need another person or we need to nip it in the bud. And how do we nip that in the bud is not participate with them. I mean, for many of you, that's not feasible. So I'm just saying, please make sure that you pay attention to that. And then write off integrity. If you're a practice leader, a practice owner, write off integrity is very important. Are you actually, is the write off legit? Is it something that is documented, first of all, right? So we need to make sure that that's all documented. If any of you have heard me before, documentation is like my craze. We need to make sure that's documented, why, and tracked. So if you have write-offs, we need in the practice management system to track why, fee schedule mismatch. Maybe there's a procedure not covered, that type of thing. I have some examples on the next slide, but don't go there yet, Cheryl. Hold on. So okay. what I want to say on that is at the end of the year, when you're looking at your numbers, you don't just have one generic patient write-off, insurance write-off. So I want write-off specific to MetLife, write-off specific to Carrington, but then the type of write-off is involved there as well. You might also have a write-off due to the patient getting mad about whatever. I mean, these things happen. The point is we need to track all of that, because let's be honest here, if you do purchase a software to help you with this, or if you do have a spreadsheet that you really like beef out and you're going to track your own stuff, you can't track generic entries. So start now by making really good data tracking points like procedure not covered, fluoride not covered. You don't have to do procedure code, but fluoride age limitation reached. That's a very high volume one that you probably want to do that. So, okay, so let's move on. Go ahead, Cheryl. Let's go to the next one here. And and so this is an example of why we're billing stuff back to patients more. Here's the issue. Patients are paying more. So in preparation for this webinar, I was taking a look at some of Zentis material, and they have a pretty good guide that just came out. I know they have the denial management guide, but they have another one, and I'm sure they can put it in the chat or they can send it to you. But what I found, I'm so sorry, I forgot the name of it. But what I
That's
found in there was that they did a whole bunch of research, and the amount that patients were paying for their care was on the rise, like big time on the rise. And I started thinking, you know what? I don't know if that ever occurred to me. So I went back, checked with a lot of the billers, a lot of the billing professionals in my membership, and was asking, what do you think? And yeah, definitely. So is that the case in your side? Are you seeing that patients are actually paying more than maybe what the carrier is paying? So there's two sides to that. If the carrier, if you have more patients paying than the carrier, is that in a position where you're not so insurance dependent? That's not a bad place to be, right? However, if it's because there's been confusion about patient co-insurance amount, that's not a good place to be. So if we are very clear and patients understand what's in charge or what they're paying, and they're making up more of your payments, you're moving in a good direction because your patients trust you, your patients trust your estimates, and maybe you have a lot more non-insurance patients that are coming through the door. It's not a bad place to be. But do we need to track this? Yes. So here's some examples that I took from some of the reports that Cheryl shared with me, which is she put in some of the patient responsibility reasons that they would put in when they're reconciling the checks. And so do you have something like this? So this is a good example you can kind of take from it. I'm sure some of you have plenty, maybe beef it up. I mean, I remember in my practice, I still do the claims for my practice. We started with one, deductible applied, yearly benefit exhausted. Then we had to add secondary insurance yearly benefit exhausted, secondary insurance deductible applied, and it just kind of expanded from there. But you know what? We were able to track how many patients actually exhausted primary benefits and secondary benefits. And that meant that we were doing, in conjunction with other KPIs, we were doing pretty good job of presenting treatment, and we were able to celebrate on that. So why are they paying more? It has to do a lot with plan design. In the beginning, I mentioned that employers are looking to reduce the amount that they're paying. Well, the only way to do that is to shift more of the cost to the patient. And you're seeing that. That is why deductibles used to be 50. Now you're seeing a lot of $75 and $100 deductibles. And you're seeing patient co-insurances not being what they used to be. It's not uncommon now to see perio and endo not in basic, and now it's in major at the 50% or lower amount or percentage. That's when you're shifting plan design like that, the patient still sees coverage, but the tweak on the backside is it's not as much. They have what they call more cost share. And so what this means for us, so translating it to us and to the people that you're training, we have to be really good with having the right amounts or as close as we can. I know it's hard. We have to have those amounts. If we don't, the patient will learn that we're not really sure, like our confidence level isn't there, and they are not necessarily going to move forward. And what really is unfortunate is when they get, a bill in the mail and it's, we said it would be $50, $100, and ends up being $600, $500. I would have a problem with that. And I think you would have a problem with that. It's reasonable. Is it avoidable? After a while, yes, it's avoidable. First time it happens to you, of course it's gonna shock you, but we do need to double check now and be really clear. And that's why eligibility and verification is so important now. To my people who've been on this a long time, my seasoned veterans, 20, 30 years ago, we didn't check benefits. Remember, we didn't check eligibility. We didn't check benefits. That was like, why? Like they're here, they have a card. Like it's fine, right? If they didn't pay or if they didn't have benefits, we tracked them down. We found them in the parking lot, before they came in, that kind of thing. So, but nowadays, the regular DNA of a practice, the revenue cycle management side of it, the foundation of it is checking on eligibility and benefits and making sure that those are in place. And then from there, we can do better estimates. We're also seeing a lot more clauses and clauses that weren't there before. So many times, actually, I'm hearing from a lot of you, radiographs is getting a little crazy out there. So radiographs not only are there clauses where there used to not be. For example, what I think you've all seen is bite wings used to be covered. Not a problem, maybe 2 bite wings, 4 bite wings once a year. But now it's pretty common that if even 1 bite wing is taken, a single bite wing, then all the bite wings for the rest of the year, even the preventive ones, are not covered. That's an unfamiliar clause to many of us until we started to see it more. So imagine being somebody completely new to dentistry. I mean, take off your veteran hat and imagine seeing this clause and you're like, what's going on here? Because why wouldn't they cover it is really what we're saying. So I think really the rule of thumb, the new norm that we're dealing with, the new normal is expect there not to be complete coverage. That's how I'm operating. I expect there to be something. I'm always waiting for the other shoe to drop, I guess. And is that cynical? Yes, but is it necessary? I think so. And I think you would be doing well by your patients by always saying to them, this is our best estimate. I'm very confident in this, but you know what? Sometimes I get surprised. I just want to warn you about that. There is nothing wrong with being honest. I would really appreciate if the reception or the treatment coordinators at, say, my medical office would say that to me because I don't trust them. I don't. And I'm probably going to be switching, honestly, because I don't trust what they have to say. And it's always hey, we'll call you 2 days later, and they never do. We're different. Dentistry's different. They expect more from us, and most of the time we give it to them, which is great. All right, so can pre-treatment estimates help? And this is the big debate. So in classes, there's always a big contingency that says, oh, they're a waste of time. We never sent in pre-authorizations and all of that. And I used to be on that side. I did. But I think now things are so uncertain. And because we can get them back so quickly, especially if you're on the portals, I think it's smart to do pre-treatment estimates, that pre-authorizations, whatever you want to call them. There is a slight difference, but just for just webinar sake, I'll just call them pre-treatment estimates. That's what I'm used to. When we send those in, what it's doing is if there is a different fee schedule that's going to be applied, you'll catch it then. If there's a crazy clause like what I just talked about, you're going to catch it then. If you are an out-of-network office, pre-treatment estimates are your best friends because you do not know if they're going to pay based on your fees or if they're going to pay based on the area fees. And if you left a network, say you left MetLife, and so you're like, okay, well, this is the MetLife fees, so I know that at least they're going to pay this. You might be wrong because they might be paying the area fees. You may have negotiated good fees. Now you're getting paid at even lower fees than what you were negotiating, what the true area rate is for MetLife. And so it's a surprise. Pre-treatment estimates avoid that. And what I will say to you is, I work a lot with the carriers and with the ADA. What the conversations have turned to recently is, why can't we have pre-treatment estimates come back with just the amounts and then we'll submit the documentation later. Right now, if I send in something for crown number 14 for a pre-treatment estimate, I have to send in the x-ray. I have to go through the whole adjudication. I don't really care about that. I just want to know what the payment amount is. And so there's been a lot of conversation between provider representatives and between the carriers. And they're saying, you know what, we could give that to you, and saying, why not? Let's do it. Will that change in the next little bit? maybe. But I know on the portals, we've been seeing that more and more, which is really nice. So, okay, so let's move to the next one. And this, I have to tell you, using AI sometimes can be frightening, but I thought this was a little bit unnerving, but okay. Imagine that we just have a whole bunch of robots doing all of the manual work, right? It's a little creepy to think about at first, but I want you to focus on the two humans who are looking at the board and making strategic decisions and really using the brain power that I know all of us have, right? Especially some of you have been doing this a long time. The amount of RCMs, revenue cycle management, ins and outs in our brain, it's pretty good, right? Why can't we use that on a more regular basis? It's because we're stuck doing a whole bunch of EOB and ERA transactions, right? We're on hold. What I want you to do is move away from the tactical. When it comes to RCM, think about it this way. The more you're on a keyboard doing entry, the less time you have to look at the numbers and see the big picture. You may find by doing that that insurance company A, which you thought was fine, you have a decent fee schedule, that's a company we're going to stay with. You're going to miss that insurance company B over here, easier to deal with, days to pay is shorter. You don't have to appeal as much because you don't have these crazy clauses that are put into place. But you're over here thinking better fee schedule, but you're missing that the most amount of revenue quicker to come to you is over here in insurance company B. And I wouldn't catch it either if I were just doing nothing but keyboard entry. So what I want for my revenue cycle managers is to move past being the one always doing the inputs. I want less keyboard time for you. I want more focus time for you, because if you can have all of the data and the trends put in front of you, you're going to catch it because you know what you're looking for, right? It's just that we don't have time. So the red flags that we're going to look at, I want you to take a look at, of course, do we have an increase in rejections, your clean claims, your first pass? Do we have an increase in rejections from a certain carrier? Does that mean that we're on some sort of pre-audit list? If all of your claims from one particular carrier, all of a sudden they move into over 30 and you're like, wait a second, what's going on? You're not changing anything. You probably are on some kind of list. This is my experience talking. So would I catch that? Yes, if I were looking for it and I had the time to see it. I want you to think about it this way. Go today, you're going to hop off the webinar, you're going to go back and do, all sorts of stuff. But think about what you do all the time that really is tactical and you could get rid of. That's what we want to automate, right? So we've already started. If you think about eligibility and benefits, a lot of it was we got on the phone, right? Then we were able to hit a button and our software can go and get it for us, right? So that's getting better and better. Posting transactions, that's getting much better. Even 3 years ago, I was saying, I don't know, and I was looking at everybody's software, like what's going on. It's really getting good out there, right? And I think that's, if you're interested in that and you want to let go of that, this is probably a good time to start looking around, because that is a high volume and it is a very repetitive task over and over and over again, right? And from a managerial point of view, from a leadership point of view, when you continue to do the same things over and over and over again, it becomes mind numbing for you. You start to check out. You could almost do it on autopilot. Like how you drive to work and you don't even remember the drive. That's what it's like, right? So I don't want that for you. I would rather you have other stuff spinning around in your head, right? So what we do though, what I do need you to take into account is that, remember how I said 3 years ago, things were different? This field that we're in right now, RCM, is where I see so much innovation, AI companies everywhere, right? So stay on top of what you need and make sure that you're shopping for that. Keep an eye out for what is on the market, because, you might say it's not worth it to have, maybe this service over here. Maybe we have this service over here because they offer more. Be competitive, right? And make sure that you're getting what you need and evaluate it, right? Then you need to oversee it. So here's the thing. We have to trust the system, but we have to verify the system. And that's what a good manager does anyways. You need to every now and then just grab a whole bunch of accounts and audit them. You should be doing that anyways. Let's be honest, if you're the manager, because even really stellar employees have off days or they start to go into a slide. You want to catch someone before they actually burn out. That pathway to burnout is where all the mistakes happen, right? So that's why we do spot checks. I also, this is fun because this is where I assign the homework to you. And you all know I love homework. We have to recognize that our KPIs are evolving. So it used to be production collections and how many claims are outstanding. Now we have a whole bunch. So Cheryl, the next slide. So what are we measuring nowadays? Okay, well, lots, right? So because we now have the ability, to have analysis on our practice management software, on our bank account, on our claims, clearinghouses have a bunch of this information too. How many, there's a metric. It's very common in corporate and it's very common in medical. It's called days to pay. For the smaller practices, medium to smaller practices, this isn't a traditional thing that we track, but we should, especially if you're going to be comparing whether or not you're going to stay with certain carriers. So, but days to pay could be when it hits your bank account. That's typically what days to pay is measured. But what I'm finding too, and other RCM people are finding, is there's a days to post metric. And now that's us. So it might hit the bank, but if you're the only one up front and you need a block of time to post it all, the days to post could be longer than that. And why that's problematic is that if there is some residual collections that we need to bill to the patient, we don't want that to age out. I would love for you to be sending out statements every day, making sure the patient doesn't get, repeat billed every day, but maybe once every 15 days, if they haven't received a statement, they'll get one. This 30-day billing cycle is just so antiquated nowadays. So we also need to then look how many days is the total claim, insurance plus patient payment. How long has that been in AR? Traditionally under 30 days, but I'm pretty sure if we really looked at it, you could tighten that up because many of you are getting paid faster. Now, if you're doing paper checks, what I think you're going to find is your AR is going to get pushed out now. Have you noticed that several carriers, they don't do check runs on a weekly basis? Some of them do check runs twice a month or once a month. So if they're doing a check run once a month, guess what? Your 30-day, what you're comfortable with, if you miss that, you're into the close to the 65, you're at the 45-day mark. Cash flow is very important in any business, and we're the same. What are we also measuring? The clean claims. You've heard me talk about that. And that's easy to find because the amount of claims that didn't go through on the first pass, that's why they call it the first pass. We'll be able to see that, right? So again, clearinghouse software will be able to see that. That is more of a training issue. And we may have a fantastic biller in the making, but we just need to get over this hurdle. And it's actually a pretty good thing to teach them because then they do realize that data matters, right? So denial management is another piece of the puzzle. This is becoming more and more staff heavy. Okay. So we can automate this, of course, telling us what we need to do and identifying opportunities for appeal. But it really is one of those look in the mirror things too. Is it because the clinical team is giving us documentation that we just can't work with? That happens a lot. Is it getting better? Hopefully, especially with auto notes, clinical notes, AI empowered clinical notes. But is it because we're dealing with a carrier that has just really tightened things up, right? You're not going to know that unless you're measuring it. So that's why we've got, and believe me, if you are looking at the RCM side on medicine and any healthcare setting, the hospitals, their KPIs, key performance indicators are, there's like 20 more like that. To me, I'm going, wow, you really track this. And that's probably even just the tip of the iceberg. So I'm not trying to give you too many to track, but you do need to have these here that's on the screen. You need to have these in the back of your mind because as a good insurance coordinator, a good RCM manager, you're going to be looking at this. So going back to denial management, is it us or is it them? Is it us? We just tighten things up, talk to the clinical team. I know that's harder than it sounds. I just made it sound really easy. I know it's hard. But also if it's them, meaning the carriers, what does that mean for us? Is it manageable? Is it negotiable? Or is it just now we're going to have to work harder? And if we're going to have to work harder, does that mean more labor? Does that mean more cost? And remember, when we're looking at how participation works, that goes into, do we stay with this carrier? If most of your time is spent on one particular carrier and you're on the phone all the time, think about the labor that's involved in participation. When you really quantify that, it gets pretty clear which carrier you want to get rid of. And so the concept of a payer scorecard in a small to medium setting, practice setting, it's really more of a mental thing. Like most of you have a payer scorecard already in your head. I do, right? But let's look at the data behind it. And so if you were able to actually pull together which carrier gives you the most denials, which carrier is actually giving you the most revenue, days to pay, all of that, this payer scorecard becomes very, very clear. Would you use it when you're looking at negotiations? Sure. If you're, looking at whether or not you want to do a direct contract with them and they're really easy to work with, maybe the fact that they're high up on your scorecard, maybe that's the one that you want to have only one relationship with, right? It also could tell you what the percentage of revenue is in your practice that's dedicated to that payer. And I'm always nervous when the bulk of revenue goes to one particular payer because it's like putting all your eggs in one basket. So if you're in that situation, and for most of us, honestly, it's Delta, so it's just so dominant. Um, if it's Delta, then all the other metrics like days to pay, if it's a long days to pay, but Delta is the bulk of my business, I have to worry about that. Why is that? Is it because we're still doing paper checks? Okay, well, how do we change that? Maybe we go to EFT. And I know most of you, and if you're on my newsletter, and you probably got notification, they're all pushing for us to go to EFT. Delta of California says next year, starting 2027, any paper check runs, they're going to assess an administrative fee of $15 per run. So it's going to actually cost you, I mean, somebody did the math, it's $780 a year you'd be paying to accept paper checks. That's a little crazy to me. It's a lot crazy to me. And so many of you have decisions to make when it comes to that. Payer scorecard can be a little emotional, right? But to be honest, the decisions we make need to be based on data. So this is the mid-year point where you have already seen how your practice is doing, how your carriers are doing. So with these new, and if they were new to you, some of this is a repeat to some of you, but with this new information, take a look at your carriers, run the reports that you normally look at, and take a look at, would this give you more insight? How can I track these metrics? Because RCM is not just billing anymore. It's not just billing to insurance and sending out a statement afterwards. It's really evolved. And with business, we have to evolve along with it, or we kind of get left in the dust. Not because we're competing against other dentists for RCM. That's not it. But because we will lose money and our overhead goes up if we're not measuring how fast and how well we're collecting. So it all kind of rolls in together. And I see a question. I'll answer it at the end of the webinar. But I'm gonna, Cheryl has some stuff to show you. But again, just want to say, re-encouraging you that if you're thinking, man, I don't do any of this stuff, it's okay. The fact is, if you jumped in tomorrow, you probably would be very frustrated. So do some research, let it roll around in your head a little bit, and then come back to it, because this is going to be a marathon. This is not a sprint. This is the new normal that we're talking about. So Cheryl, off to you.
Thanks, Teresa. Wow, you've given us a lot to really think about, and such great information. Definitely things that we can take away, dive deeper into our own metrics, and consider what those next steps may be for each of us. So very, very helpful, and yeah, good stuff. One of those things you may consider, and what I want to touch on, is kind of the automation of those repetitive tasks that Teresa talked about, those things that are, kind of causing us to spin our wheels and take too much time, where then we can't do our focus on, more important things. 6 out of 10 practices are moving to automation. And this is primarily because automation it focuses on those administrative tasks. So it leaves those more complicated tasks following those metrics, patient-centered, patient-focused tasks for that manual work. That's kind of where you want to spend that manual time. Who doesn't want to, I'd love to spend more time with the patient than, posting my payments, right? You always enjoy seeing those people coming in you haven't seen for 6 months. So from verification tools, aggregating those EOBs and ERAs, bank reconciliation, auto posting, denial management, automation is saving many offices a lot of time, and it's improving efficiency. That manual flow is forcing teams to rely on human effort instead of these automated workflows that are available now. And this does tend to make the entire revenue cycle slower, a little bit harder to scale, and of course, more dependent on that individual staff capacity. If you've got somebody that's off sick or, takes a vacation, you've got to figure out how am I still going to get all of that done? And sometimes I think even these days, it feels like it's harder to find good staff who, as Teresa mentioned, a lot of, our new people, they don't understand the dental industry, or they're just getting used to it. And it's so much more difficult than it used to be. There's so many moving parts and pieces. And so it's a hard thing to kind of learn and get a grasp of too. And then finding someone that's going to stick with you through that. One of the major administrative tasks that's a time eater is the manual posting. It takes the staff a lot of time. They've got to track down those remittances across all the payer portals. They're chasing missing EOBs. And at the same time, they're doing all these other tasks as well, right? So they're answering the phone, they're checking out the patient, they're, helping maybe in the back office. I remember those days and where there's so much going on at one time, and this pulls focus away from your patients and from your cash flow. Also, I think in that multitasking, and nothing against anybody. I certainly worked the front desk and I know what that was like, all the stuff going on at one time, having one phone in one ear and one phone in the other, and someone's coming to the front desk and you're like, oh my gosh. It's highly susceptible to mistakes, right? Because you forget where you were, what you did. And so even those small posting errors can lead to some incorrect patient balances. It can cause missed underpayments, lost revenue, increased rework later down the line. So those things can help be eliminated with automation. And that's one thing that we've tried to do with Zentist. This is an example of our Remit AI product. So in our product, we bring access to all your EOB and ERA data in one place. So not just your EFTs, but also your EOBs from your checks and your virtual credit cards. We're pulling all of that and we're converting it into a standardized format so that it makes it easier to ingest that data. We all know how those EOBs look. They're all different. Everybody's got, even, one insurance company may have a couple of different formats of that EOB. And sometimes trying to just find your patient name in that document can be a challenge in those documents. And so just being able to have that standardized so you don't have to do that hunt, where's Waldo kind of hunt on your EOBs to find the detail and the data that you're looking for to be able to post that payment. We use your bank data to surface daily EFT deposits so that we can match remittances to your corresponding bank transactions. So that helps in your daily reconciliation. We also provide auto posting. Now we do this into 4 PMS systems. We do it with Denticon, Open Dental, Dentrix Enterprise, and Dentrix Ascend. So we're able to actually auto post about 80% plus of your payments directly into the patient's ledger. This improves that reconciliation and claim resolution. It saves time for your team. It impacts everything from AR performance, patient billing accuracy, hitting those financial targets, which also helps to maintain a strong patient experience because you're now able to spend that time with them. As Teresa mentioned, denial management, and she kind of showed you this classification of categories that we created. We took all of those CARC and remark codes, those combination codes, and we categorized them so that within our system, you can track what's happening with each procedure code, with each payer, even by provider. You can see, is there, again, as Teresa mentioned, maybe there's some clinical information that we're not getting properly from the back office that would help us to be able to get that claim out clean the first time around. Without this visibility of seeing where things are falling, it can be difficult to determine where do we have problem areas. And so with automating this denial information, we make it easier to understand and track those concerns, and allowing you really to be able to prioritize clean claim issues. Another thing that Teresa talked about was predeterminations. Are they necessary? I will say something that I notice with our clients is I see more and more where claims are denied because they weren't pre-authorized. They're, whatever those procedures are. And so number one, making sure when you're doing that eligibility check, finding out what procedures do need to be pre-authorized so that we make sure that we get that done, before they come in. But one thing that we did is we started, we're seeing all these pre-authorizations coming in when we're pulling the payments from the portals. And so we decided to create this specialized area in our platform. And treatment coordinators love this because if you're still getting those papers in those predeterminations in the mail, you've got a file folder, you've got to flip through all of that to try to find that patient that you want to call to schedule. And we just digitized it. So again, standardized format, you can filter by that patient name. You can filter by whether it's approved, partially approved, or unapproved. You can look at the dollar value. If you've got a 2-hour time slot, that treatment coordinator is going to want to look for, a higher dollar value that she wants to call rather than, maybe just an $80 or $100 pre-auth. So it just allows them to be able to quickly work through those, work them from here. They can call, they can make notes on those, and it just makes their workflow easier. We also have a robust analytics and reporting section, and this is where being able to track those KPIs more efficiently comes into play. You have standard reports that come with our platform that help you to drill down into what's actually happening. The other nice piece about our analytics section is that we can create customized reports. We know, different practices, they prioritize a different KPI than maybe another practice does. And so we wanted to have that capability to be able to say, what metrics do you want to see? If we're not showing you what you want to really track, let us know what that is, and we'll create a customized report for you. We have all your payment data, and so we can make that available for you so that you're getting the details that you want to see. So this is kind of how we're helping to solve the manual process, improving speed and efficiency within practices, giving teams time back in their day, where they can actually focus on the patients and focus on more pressing concerns, looking at the numbers, getting those appeals submitted, those types of things. recently I was talking with one of our newer clients who expressed how much time Remit AI is saving her. And even her doctor commented that it was the best month of importing payments that he's seen. So he was super excited as well. And she said, especially with the two-factor authentication now that most portals have, that's time consuming. So you think about how much time you're spending logging into those payer portals, going through that two-factor authentication just to get an EOB. And then you have to do that maybe 16, 20, 30 times to get all of your data to be able to then post those payments. And so she was excited because she felt like that was draining her time. Now it's not. She doesn't have to worry about that, and it's all here for her. So that's what I wanted to share with regards to the analytics, or to the automation. And now we're going to answer your questions. So feel free to raise your hand. I think Buki will turn on the ability for you to speak and talk with us if you want to answer or have a question answered, if you want to ask it, or you can put it in the chat, whatever works best for you there.
I can start actually, Cheryl, with one that was
Awesome.
sent here. And then I know Catherine has a question too. And yeah, if anybody wants to speak up, that'd be fun.
Yeah.
Okay, so there's a question on with all the new sources that we're using, remote insurance and all of it, what is the average percentage of overhead nowadays? Years ago, it was 65%, but it has to have gone up with how labor intensive insurance has become. So it's that this is really funny that you asked this because I was just chatting with somebody this morning over text. What it is the overhead, the staff overhead has always been set at 28%, right? But when you take a look at overhead and software is typically not part of the labor. So if you're using a billing company, if you're using a software, then that actually gets allocated in a different area. So theoretically, it should go down. But if you are the only person doing it and you have to hire two or three more people, then yes, your staff costs are going to go up. So, it balances out. There is definitely labor savings by automating. And we found that. I mean, remember back when we used to write in an appointment book and we had to write it, we had to track it, we had to go purchase it. Then it got absorbed into the software. So that cost, that manual part of it was then absorbed. Same thing with tracking lab cases and all of that. The chat I was having this morning really focused on, do we think that all of this AI is going to reduce labor? We actually were talking about this, and I thought, yes, it has to reduce the cost of labor. It just, I mean, that's the point of automating, right? And so what I do think it means is that your labor cost for a very experienced person to oversee it, somebody who is strategic, that doesn't change because you're going to need someone who knows what they're looking at, right? You can't just set robots out and then not let them and then not check on them. And I'm just thinking about this little desk thing, that this picture that I had before. So I know CPAs, just off the top of my head, CPAs have told me that overhead has not been decreasing over time. And so I just don't know if that's, dentistry used to have some really good margins, right? I think that's changing a lot. And then the second follow-up question to that was, have I ever heard of a code where they zero paid on an item? We send something in for a pre-treatment estimate, and then it comes back with no payment. And that's because they're not fully adjudicating it at the moment, meaning they're not processing it. They're just giving you an estimate. And that's why it always has language like, this may not be paid. That's why the documentation piece is so key. It has to be like bulletproof, right? Will they send something back with a zero payment? I don't quite understand the part about the code that they zero paid. So that maybe we can get some clarification on that. And then Cheryl, Tracy wanted to know, she has CareStack. Is that something that you work with?
Yeah, so absolutely. We really work with any software. We can't auto post into CareStack, but we still provide the automation of bringing in all of your ERAs and EOBs to one platform, standardizing it so you can easily use it. The nice thing about this standardized format of that EOB ERA is that it does make it easier and faster to manually post, and you're still saving a lot of time because you're not having to go to all of those payer portals to look for that data. And we also, if you're interested in converting from checks to EFTs, that's part of our process, is that we help you get those converted as well, so that you're not having to spend the time doing that, because that's also a time drainer, is getting those enrolled into getting your checks enrolled into EFT. So we do help with that as well.
Awesome. And then Tracy, what I can do, because she's asking what is the average overhead now? I don't think it's higher than 65%. I think there would be a huge like, oh my gosh, uproar. I mean, I think all the articles would be writing about that, or magazines. But what I can do, if you send me an email, I can check in with my people over, my friends, not my people, my friends over at the Academy of Dental CPAs. I'm pretty sure they'll tell me what the average overhead is. So I'm happy to do that. And then Catherine asked, where and how do your description for non-payments go? Are there false procedure codes used for those? Yes. So that would be like a service code. And so for example, in our office, 1302 is what we use for deductible was applied. Then 1303, so, your insurance, no insurance was in effect. So you would set up those, and then your software would then track it. But then I want to ask Cheryl how, because I'm sure there's best practices around setting that up. I've been using those service codes for years. Maybe there's best practices around that, Cheryl?
For setting up
Like the denial codes.
yeah, it really was a process. I think, coming up with all the different categories, making those, make sense for everybody across the board. So I think definitely, use the ones that you're most familiar with, that you're seeing the most, and kind of go from there.
And so the two questions in the chat have to do with surcharges for ERAs and EFTs. Yes, there are going to be for EFTs. I see that. Now it depends if you're using a service to help you reconcile all of that. That should be included, in that's cost of doing business, right? But here's what I don't like about getting paid for EFTs. And what you'll need to do is register with every carrier, right? So if they send you to their payment platform, how they, hate to say it, but how they get you is they want you to do a bulk enroll. That typically comes with charges. If you do individual enrolls, like you do a direct enroll with MetLife, if you do a direct enroll with Delta, that's how you should avoid the fees. That's how it is right now. So, but remember, it takes, sometimes it takes 2 to 4 weeks to get that set up. So you don't want to wait until December of 2026 to do that if you want to get it going for 27. But if you're, this is definitely, it's going to be time consuming if you don't do it. Now, there are services that will help you get completely enrolled. Those, just be careful because they might do the bulk enroll because it's easiest for them. But I am not a fan of having to pay to get paid. I am
Right.
not. So I hope that you're able to avoid it. And there's definitely some online resources too that can help with that. Yeah. Cheryl, do you have anything?
I was just going to say, when we do help to enroll in EFT payment, that's something that we definitely find out. Obviously most people do not want to pay to get their money. So we definitely know which carriers, to make sure that we're doing that individual enrollment so that you're not having to pay to get your money. We've kind of done it long enough now to know, where we can go to avoid those fees for you.
And I would have a separate bank account set up that's connected to your main account. I would never put EFTs directly into the main operating account, and CPAs are pretty standard on that as well. So definitely talk to your CPA about that. And then Tracy, good example of the denial codes. 1305 in our office, we set up a procedure code, no D on there, just 1305. And then we put on their procedure not covered by insurance. And then we marked it do not send to insurance because it'll post on the ledger, but we don't want it to get sent to insurance. And of course, it has a zero fee. How that's also helpful is when you print the statement, it prints on the statement. So it's actually like a little explainer for it, which that's why we started using it years ago. But now with the ability to track the different ones in a better way, because I would always have to run a manual report. Now that's going to help you out. So that's why I say it would be a good idea for you to think through that. Don't do them on the fly, but think through which service codes you would use and see the most. So start thinking now. When you start seeing zero payments and denials, you may want to do in the back of your mind, oh, I should create a code for that and just start a list, right? Yeah. And Tracy saying use a non-covered code as well. Yeah, something like that, and just make it specific. And then Hope is saying, are you hearing more about insurance companies doing more takebacks? Yes. Now this is a problem, Hope. So what she's asking is she says she has one GEHA from a data service over a year ago, was paid a year ago, non-par, and patient no longer has that insurance. We're trying to fight it. Hope, I am your soul sister. I am fighting right now. We have about $500 in GEHA take backs. And I just heard from the office that there's another bundle. Here's what's going on. Here's the behind the scenes. AI is being used by everyone. And what this has helped do is the carriers have been able to offer to the employers purchasing the plan. Now we can audit the payments. Did we actually do it correctly? So now you're seeing so much more AI being used to find when claims really shouldn't have been paid. Then they're able to bill us back for it, which is not fair. And I can tell you, this is really heating up as well at the ADA. What I am not appreciative of is that when it was their error, they still are sending it to us. And I know half of the ones from GEHA Hope are actually their error, but they're coming back to us. And so we may be considering some bigger action on that. We'll see. But another issue I want to tell you is that if they are taking from another office, like, because I'm hearing this too, like they're withholding it and it's not even your patient, it's not even your office, and it's coming out of you. I'm sorry, it's the patient that was at another office. Now they're at your office and they're taking it from you, but really the other office. If you're running into that, please let me know. And I want to put you in touch with people at the ADA because this is something that cannot stand. And they are tracking that. So I would love to get you connected to the people who are tracking that. Yeah. It's getting hairy out there, isn't it?
Yeah, it is. It is. I honestly too, I was going to say with AI, kind of processing our claims that are going in. I've definitely seen probably in the last a couple weeks, especially, I've seen where I know that it had to have been AI that assigned a denial reason to a code, and it made no sense. It was totally had nothing to do with that procedure, did not make sense whatsoever. So there's probably going to end up being a lot more of appeals in those scenarios too, because we're getting misinformation on those things as well.
Yeah. And is there a limitation? That's always the next question. I knew someone was going to ask. I was going to answer it. I was going to say it, but I knew someone was going to ask. So it's all over the place. If it's a government or self-funded plan, it's not beholden to state law. And if it's a government plan, they can go back. I mean, I've seen 5 years. Tracy's seen a 10-year. There's no limitation there. GEHA is a government plan. So if it's a fully funded plan, which is a smaller plan, state plan, state regulated plan, I believe it's up to the state to set it. So you're looking at maybe 2 or 3 years, but there is no limitation. So this is why this is actually probably it's heating up to be one of the most painful things in the industry, because this is definitely manual work. This is calculator work. And I feel like I'm so far away from that. And I'm like, oh no, like I can do math, but do I have to again? You know, so, and is there anything being done about it? There's fighting. I mean, there's definitely ADA is making calls there, but they're gathering information. I think it would take, because GEHA is governed by office, uh, oh gosh, it's OBM, Office of Bureau. I can't remember what it stands for. It's a government agency. And so what that's going to mean is almost the employers are the ones who are going to have to complain. Is there enough doctors that can get together and go lobby? That's why the ADA is gathering information on it. So I don't think you and I, as powerful as we are in our own worlds, we can do much. We have to like kind of get together on this. Yeah, good, very good questions here. Gosh,
Yeah.
this went by. This flew.
It went by fast, didn't it? Yeah, it did. Any other questions before we kind of wrap up here? I don't want to cut anybody off if anybody has another question. But meanwhile, I do want to thank you all for participating today. A special thanks to Teresa. Just really appreciate you and appreciate your expertise taking the time to share with us today. Really, really great information. Before you hop off, feel free to scan the QR codes for more information from Teresa and from Zentis. And we hope to see you again soon.
Yeah. Sign up for Practice Management Power Day. That's my event in September.
Yeah,
There's the code.
absolutely.
Thank you, everyone.
Thank you. Everybody have a good rest of your day.